Ladies and gentlemen, welcome back to the channel. I'm going to give you an update on my passive income portfolio for the month of May. No, we're in May. April. Yep, I'm going to give you an update for the month of April, let you know where we're at. There's a total of 5 projects we're going to be covering, or protocols, projects, strategies, whatever you want to call them. Now, it's important to understand these projects. They're all diversified. I'm earning in various different ways. One project I've sort of cashed out on. I'll talk about that. It's a very popular project. Some of you are going to be shocked, but I'll explain my reasoning why. Another project I've entered in, it's a little bit more risk, but currently we're on track to earn somewhere between $30 to $40 a day with that project. Overall, it's important that we take a look at what has happened to the market in the past, I don't know, month or so, because that does affect our overall portfolio. So it's important to understand that the market for the past month has been sitting, it's down. I mean, we're down, Bitcoin's down 11%. If we go over here and take a look at where Ethereum is at, Ethereum is down. Ethereum's only down 10%. So we've taken significant dips in the market. That has in fact affected our portfolio, but we still ended the month positive. And that's, to me, that's what I'm looking for. I'm like, how can I win even if the market is down? And I'm going to be showing you all of that. We're going to go into all the projects and my thoughts on those projects here in this video. So first up, here's our spreadsheet, if you will. This is for the month of March. This is for the month of April. First up is Lyra. Many of you know that Lyra is a protocol that I use. I love this protocol. I plan to talk about it more on the channel. But this protocol is essentially, what I use it for is to sell options. I trade options. Primarily, I sell options on Lyra, and I do it to be able to earn some passive income. I've discussed it several times on this channel. I'll try to put a video up in the comments or down below, or in the cards down below as well. You can take a look at it there if you want. But with Lyra, I started out with $9,612 at the beginning of the month. I ended the month with $10,185. Now, if you know anything about selling options, this is my collateral value. I had a lot of people asking, how was your strategy? I did a video talking about my Lyra strategy, and I talked about selling options at about a 15 delta. And what I ended up doing, because those positions got into trouble, is I just rolled them out further into the month. I went out about 3 or 4 weeks. In one case, I think I went all the way out to 5 weeks, just to rake in some premium and just to keep my collateral high. So I've got options that go out to the end of May, end of this month. However, and I'll do a whole video probably dedicated just to that. If you'd like to see it, let me know in the comments. But as you can see, we have increased our collateral position, which is my main focus, by $573 this month. Even though the market's pulled back, I think that is huge, and we're at 5.69% increase, so almost 6%. By the way, this is total dollars earned essentially with the strategy, and this right here is average percent. So I've averaged is 0.95%. Of course, it's too early to put a lot of weight into that average, but down 4% on my collateral value last month, up almost 6% this month for Lyra. I think that's really, really good. XtraFi. This is a new one. So I put about $5,000 in XtraFi probably about 6 or 7 days ago. Currently, it's about $4,963. This is one that a lot of you have asked about. Last week, I had liquid loans here. I'll talk about liquid loans here in a moment, but I've moved it in this little portfolio. By the way, these are in no particular order, except the projects that I'm active in, I have first. The projects that are sort of on the back burner, I have towards the end. I'll show you that in a moment. But XtraFi is it's a leverage liquidity platform essentially on Base. So I did a video showing bridging over to Base. And when I bridged over to Base, what I ended up doing was coming over here into XtraFi. The Base chain, I don't totally love, if I'm going to be honest. That's on optimism. I don't totally love the Base chain, if I'm going to be honest, but I do think there's potential for some explosive growth. Again, this is not financial advice. These are my opinions, my portfolios. Everything I'm doing in crypto, it can be very, very risky. So, I'm not recommending that you do any of this stuff. However, I decided to come into some of these pools, and again, I'll do a separate video and I can show you the exact pools that I'm in. but I'm earning some good returns on those pools overall. Now, at this current moment, the prices are down a little bit. If you understand how yield farming works, the prices are down just a little bit. So I'm down about $37. Not too worried about that at all overall, because the pools, the returns have been doing really, really good, meaning that the price of the tokens that I'm in are actually down 15, 20%, but I'm only down $37 out of 5,000 because of the compounding nature. What XtraFi does is they compound, it's leverage yield farming that also is called it's an automated market maker, AMM. So it compounds your position. So when you open up a position on XtraFi, I'm actually open up positions on Aerodrome. But XtraFi has a way of allowing the use of leverage. By the way, one of my positions I'm using leverage, one of them I'm not. Again, I could do a whole video on that if you want to see it. Let me know down in the comments. So far we've covered Lyra, we've covered XtraFi. Next up is BeingX. I need to move these. I'm not sure why these are here, but I'll move. Let's see. Delete column. There, delete column. Okay, next up is BeingX. We're copy trading on BeingX. Now, with the market taking a crap, BeingX has not done as well this month. Currently, however, when I say that, typically with BeingX, when you see a down month, usually the next month is pretty big. I don't know if it'll be this big, but I'm thinking we may see returns of over $1,000 next month. We'll just have to see what the overall market does and how the traders hold up. I did add $144 to my BeingX account. And I'm still down. Oh, I should adjust this actually. This is more. I'm actually down. I need to adjust this for my next video. These are off a little bit because I didn't include this 144. So I'm actually down closer to $500 for the month. So that's going to throw all my numbers off. I just realized that. Hold on, let me pause the video. All right, I don't have time to do it just yet, but the numbers are going to be off a little bit. I'm getting ready to go catch a flight, but I want to get this video out for you. All right, so I love BeingX overall. If you want to know more about BeingX, I'll put a link in the description. You can follow my journey to get to a consistent $1,000 per month. Someone said the name of that email series is "Follow My Journey to Get $1,000 a month," and somebody said, "But you're already over it," when they saw it last month. Well, yes, but again, it's consistent $1,000 a month. That's the goal, or I should say, average out $1,000 a month, which I guess I'm averaging it now. But this was a really unusually high month for me. I don't expect most months to be this high at all. Next up, let's talk about liquid loans. So I ended up pulling out of liquid loans. Some of you want to see these casino dividends. We'll get to that too. I ended up pulling out of liquid loans. And the reason is nothing against liquid loans and what's going on over there. It's really just about trying to get a higher return. This is actually a lot of the money that I used to go over into base. The 5,000 of it anyway. The liquid loans, I ended up doing about 3% last month. Not bad, not bad. In fact, it looks like if you go over there now, they changed the APR, but all they did was, this is a weekly, it used to be an annual APR. And if you come to analytics, you can come down here and see staking stability pool. Where's it at? Stability pool. Stability pool APR. They used to always show this blue number. And I guess because of this outlier here, people felt like it wasn't accurate, so they ended up showing the weekly number. The problem is the weekly number is extremely volatile based on liquidation. So for example, I don't think it's reflected yet here, but there were some pretty sizable liquidations. And if you look at the USDL amounts, $248 worth of USDL, $115, 6 figures back to back, and USDL was redeemed. What that will end up doing is sending a lot of PLS to the stability pools. So I got a feeling this APR is going to tick up a little bit, even though it's showing under 30% right now. Here's something else that people don't realize. A lot of people, listen, it blows my mind. A lot of people are stacking the loan token, and I cannot understand why. And I've discussed this on this channel before, but this loan token is just, the price is just dropping. I mean, a month ago we were sitting at about 400 here. Now it's 298, and it's just dropping. And since a big percentage of what's paid out in this APR is the loan token, I expect the loan token will in fact continue to drop until these stability pools start getting much closer, because this stability pool here, you stake your loan token. And when you stake your loan token over here, you earn USDL and Pulse when people create new loans. Over in the stability pool, you earn when people redeem. There's whole videos on this stuff, but what you need to know is I think 30% APR on a stablecoin product that is relatively stable. It's down a little bit right now, but the earnings are quite good on this product. I like it a lot. I think, yeah, there's not much more to say about it. I like it. I like that it's flexible. I like that it's stable. I like that you can withdraw your funds at any point in time. Obviously, there's risk. This whole ecosystem is still relatively new, but I like earning a 30% APR on a stablecoin product. The reason I pulled out was just to try to earn more APR for now. I do plan to probably come back over here at some point. The thing is, I want to see where this goes. If it starts getting below 20%, that's going to be a lot less interesting for me. And that's going to really depend on how the stability pool does, because I think the stability pool, the only reason to own loan right now at this moment, even though there's supposed to be some new reasons in development, the only reason to own it at this very moment is to stake it. But you're only going to earn 18% in the staking pool. And the staking pool is pretty consistent. If you come over here and take a look at analytics. So that's where I'm going to go. This is the staking pool APR. This is pretty consistent. So you see the weekly is down to 5, but it's up right now. And it's probably going to continue to go up as people open up loans. We'll have to see what happens. But again, same thing here, big outlier. So they got rid of the APR, the annual APR. But you know, you're earning 18%. As long as this stays low, why in the world would you hold loan to earn less percent than you would if you sold it to get USDL and to just go into stability pool? You could argue all you want about the tokenomics and the future utility, yada yada yada. That's fine. That's future utility. You're losing value every day that you're holding a loan for now. I do think the loan price will stabilize. 1,000% I think it will stabilize. It may actually start ticking up in the medium to long term. We're talking 6 to 8 months from now, we may see this price stabilize and start to tick up. Most people aren't saying that because they're drinking the Kool-Aid of the Pulse chain. As much as I love Liquid Loans, I follow them on YouTube, I'm in their Telegram, I like what they've got going on. I understand from a tokenomics supply and demand standpoint, there's no reason for this price to stay right here. None. I honestly, outside of sheer speculation, and I've got good friends of mine stacking loan like there's no tomorrow, and their bag is losing value like crazy. So if I'm missing it, someone let me know down in the comments. I'm okay. I'm open to hear what else there is. I do think the price eventually stabilizes and may start to tick up. The problem is, how low will it go before then? That's the question. And I think we'll see the price stabilize when these two APRs start to get much closer together. Either way, that's just my thoughts. That's why I pulled out for now. I think there's other earning potential somewhere else for now. All right, so let's go back here real quick. And now I want to show you casino dividends. So I did not put the casino dividends in here, mainly because I've been earning for so long with these casinos. The casinos, by far, some of you have been following me for a long time. You know for a fact these casinos have done really, really well. BetFury and StarBets have been among my recent best. I've got some concerns about BetFury. I don't have a lot of funds on StarBets. Most of this came from StarBets. I'm sorry, I don't have a lot of funds on BetFury. Most of this came from StarBets. But ladies and gentlemen, I put a starting balance of 0 because I had withdrawn it to add. I think I added it to no, it was over here, part of this that I added to LL, Liquid Loans. However, I got $500. I have not withdrawn it. It's just sitting there. When I get to about $1,000, I'll probably pull it out, and I'll probably put it I'll probably add it to Lira, to be honest with you. I like Lira a lot, and I can do a whole nother video on that, but I like Lira a lot. Mainly it's because it's the one I feel like I can control the most. And I may do a whole video on ranking these as well. I've been thinking about that. Let me know in the comments if you want to see a ranking video. So the thing with these casino dividends, I originally put in about $6,000 and just compound it, and I have about 3 million tokens over here on StarBets. And it only cost me at the time about $6,000 to get those 3 million tokens. Now, the biggest reason I'm not adding more funds is because to get those same 3 million tokens now, I did the math. I want to say it was some crazy number, $20,000 or maybe more. I forget. I'll look more to it later. But right now, $500 a day. I love it. It pays you, not a day, a month. It pays really well. I won't keep getting that. It will probably slowly tick down. I'm getting somewhere, depending on the price, how the price of the div pool is. Just so you understand, this div pool is created from whatever people lose and whatever currency they lose it in. And so this is real yield coming from basically the operations of the website itself. So I'm really loving it, but now it wouldn't be as easy of an investment to get into now. The returns are not there. But since I've already got them, I've stacked it. This is, I've been earning on this thing for years and years, and I've been withdrawing the past, I don't know, 18 months or more, maybe 2 years, 18 months for sure. I've been withdrawing pretty steady. Whenever I stack up a bit, I just do a withdrawal and I'll add it somewhere else in the portfolio. But I do want to track this because I should be able to earn on this for a really long time. And who knows, I may actually go in over there with some. I keep toying with the idea of, even though it's a bad investment, just because it pays out so consistently for so long, just to dump another $6,000 in there, $10,000 at some point. I don't know if I'll ever actually do that, but it's definitely interesting to think about. Now, let's look at my total returns. This is kind of what I'm liking right here. I've made $400 for the month, plus $500 in casino divs for $900, down from last month. Not bad though. Keep in mind, the entire market took a bit of a crash, and I'm still doing okay. To me, that's what passive income is all about. It's not about trying to pick the next meme coin or the next altcoin that's going to do 100x. It's about doing your best to secure consistent income over time.